Okay, welcome today on the WBAIF conference with the country Belgium. So my name is Rudy Aernoudt. I'm Senator for Belgium and Chair European for the World Business Angels Forum. And we have a great panel to discuss about what happens in Belgium. We have a serial entrepreneur, Dirk Paling. Welcome. We have a business angel and author, Veronique Boxtal. Welcome.
Thank you.
And we have the boss of the Business Angel Network, Flanders, Reginald Vossen. Welcome.
Okay. Well.
So to start with, I would first say, let's try to present yourself, and noblesse oblige. Perhaps, Veronique, can you start by presenting yourself, who you are and what you're doing in your life?
That's the advantage or disadvantage of being a woman these days. I always present myself as follows. I wear two hats. On the one hand, I'm an entrepreneur and at the same time an investor and also a serial entrepreneur. I'm running my food business. And on the other hand, I'm a lecturer and researcher at an institution of higher education, UCLL, which is part of the KU Leuven Association. I'm also an author. I wrote a book, The 1 Million Euro Woman, as my field of research, on the one hand, is looking into female founders specifically and how they grow and fund their businesses. And I'm also running a scaling program for female founders wanting to scale to their first €1 million in revenues, hence my book, The 1 Million Euro Woman.
Thank you very much. Let's move on to our serial entrepreneur. Dirk, what are you doing with your life?
Nice to meet you. My name is Dirk Paling. I'm a serial entrepreneur. I'm active in real estate and also in real estate technology. I am running a co-working business and a business center business, and also myself a technology company that is active in the management of buildings, more specifically in workspace management of buildings. We have also a project development company. And then I'm the founder and the chairman of what is called the European PropTech Association. That is, in fact, the European umbrella of all the 3,200 startups and scale-ups in technology for construction and real estate in Europe. As such, I represent all these 3,200 companies, and my work is situated in financing programs, which we sometimes also design with the European Commission, creating legal frameworks for those startups and those new technologies, and also standardization of the market and the scaling up of the cross-border collaboration. That's in a nutshell what we do.
Thank you very much, Dirk. And last but not least, Reginald Vossen, the Director General of Van Vlaanderen.
Okay. Yes, indeed. I'm the CEO of Business Angel Network Flanders, which is one of the two major networks in Belgium. As you probably know, Belgium has like two big parts, Dutch-speaking part and the French-speaking part. And also on Angel side, this is nicely separated between the two parties. So I'm managing the Business Angel Network for the Flanders, the northern part of Belgium, region of about 6 million inhabitants. We are a network of about 220 members, realizing at about 30 deals per year. We are in operation since 1998, being one of the first networks, I guess, on the European continent. But perhaps we'll go into more detail on our route until yet. Besides that, I'm also president of Business Angels Europe, which is the umbrella organization for the national trade bodies of angel associations and angel networks throughout Europe and beyond, also in Canada.
Thank you very much. I think that's a nice presentation. So what we want to do together now is look what's happening in the field of financing in Belgium. And so before we dig into the concrete topic of business angels, I would like to have an overview of what's happening in financing in Belgium. And the first question I want to raise is about venture capital. What I see, in fact, last year is the venture capital. There's a lot of dry power. There's still money there, a lot of money there. At the same time, it's very hard to find new VCs, especially for a first start or a first person who set up a VC fund. And I still see that it's hard for companies to find money. So is there somewhere a paradox? Do you have an idea about this venture capital paradox? I don't know who wants to start. The floor is yours. Dirk,
Dirk, you're muted.
Yeah.
I'm sorry. I can start to answer on that one from my personal experience, because we do work a lot with VCs. I see within this domain of technology for real estate and construction that there's certainly an issue for the VCs. The first is that during the last 5 to 10 years, a lot of money has been invested in quite some companies, both startups and scale-ups, at valuations that at times have been way too high. Money has been invested where the VCs did not quickly enough. We're looking at when is the return coming, or when are we going to see black figures instead of red figures. So that's one thing, because now these VCs are paying the price for having overpaid 5 to 7 years ago. That's the first thing. Second thing, you also know that in the circumstances, economically speaking, that we have, not only in Europe, it's a bit around the world, startups right now are struggling, especially the ones who needs to find new rounds, right? And the third point is that the VCs themselves, they have a lot of pressure of the LPs, because their LPs, so their investors, they are asking them the same question. It's like, okay, we have invested in the period of 5 years, you have invested, but there's still a lot of money that you did not invest yet. So we need to see more return on our investments. So we have now the VCs, and that's my fifth point. If the VCs right now, they look at startups, they look in a much more critical way than they did 5 to 6 years ago, which means that they will invest not so easy and not so quickly as they did a few years ago, right? Mm-hmm. So more scrutiny on the startup itself, and a way it also has done an impact, a negative impact on, there's still a lot of money sitting in quite some VCs. The money is not yet deployed. They're waiting to deploy it because they're they want to see, or they are more critical. So it's not because we have less startups. On the contrary, we can be very, very proud in Europe because we are doing really much better than we did 10 years ago. It's not that there's not enough startups, but from the startup side, the financial plan is not always as good as the VC would expect. And the markets at this moment are all neither what you would expect or what a startup would hope for. And I think all of that really is creating a momentum where you have really difficult circumstances, especially for also the bigger ones, the ones that need, and then we go out of your domain, Reginald, the ones that need 10 or 15 million. It's really a problem. And now getting back to Reginald, that's why we need so much input and involvement of the business angels. It's very simple.
Reginald, on the venture capital analysis, can you follow that reasoning?
Yeah, fully. Perhaps one aspect which is very important in this one, once COVID hit, all funds which were there, and most of them were recently there, certainly in the field in which early stage investment roams, because in Belgium, or at least in Flanders, we have a scheme which is known as the Archimedes scheme, which made several funds starting up together, looking at the same projects together. This dates back to 2007, but these were closed-end funds for 10 years. So in 2017 and 2021, we had new versions of those. So that was already an issue, because they were all simultaneously created and looking at the same project in the same period. But then when COVID hit and the other crises which came behind, these funds which were already invested in some companies, they tended to keep their assets for follow-on investment, because most of the projects were delaying or even went bankrupt. So there was a lot of money saved, so not put into the investment period into new projects, but saved for follow-on investments which were needed in the companies in which they were already invested. And this created a very huge gap for new starting companies. And that's also one of the perceptions I have in the market, that VCs tend again to go a little bit later and to create a gap in which angels should come. So a lot of reluctancy is there with VCs to move in when angels have already invested, to take over the role. So we need angels to start investing in second rounds and third rounds because there is nobody else there. And that's, for instance, why a few weeks ago only we launched our new program, which is called Accelerate Angels, in companies in which already angels from our network have invested, we create a speedy system in which new investments can be followed on the first investment by having well designated and how should I say, identified projects with the name of the company and the angels already invested in those companies being sent to a selected group of angels who have already agreed that they were able to invest with bigger tickets starting from 50,000 euro in order to create a quick way of getting those second or third rounds into these companies in order not to have the entrepreneurs too much distracted from their business and having to look outside because they will be losing a lot of time. So it's also creating a new channel for our angels by having these kind of projects, which are already a little bit out of the danger zone, perhaps, but need bigger tickets. So angels have to move in later on in the process, indeed.
So if I got it right, the VCs are moving closer to the market, and so you create the kind of second equity gap, and you need new instruments to fill it up. Veronique, can you follow that analysis? Do you agree with that?
I'm looking at it, Rudy, as you know, with a female perspective. I was at a panel discussion earlier this week, specifically for female founders in life sciences and health tech, where there were a couple of investors, VC funds present. What you see there is that there is certainly, like Dirk says, more scrutiny. More looking into what is the potential of the project. And in life sciences health tech, you have this long product development period ranging between 10 to 20 years. Already looking also from the beginning at follow-up investments, seeing who's going to come in next in a next phase and a next phase, talking to the ones that potentially will buy the firm down the road, the big pharma. And what I heard as well is that there's much more scrutiny in terms of how they spend the money. If they get the money, to start spending the money wisely, not to overinvest in the beginning in headcount, for instance, but keep bootstrapping as long as possible. Even if you have the money, spend it wisely, also with the testing of the product. This is talking about a specific industry. On the other hand, if I look at other female founders going after money, well, we all know the issue that it's not that easy as a female founder to get funding. They sometimes have the feeling that they are being scrutinized more than male founders. I don't have any written experience about that, but it's true that the focus of VC investors and investors in general has shifted from merely looking at the growth potential, but also at profitability of the business down the road.
But I see, friends, you speak about female. There was a study recently from the Boston Consultancy Group that investing venture capital into female-led companies makes a higher return than on male-led companies. Of course, this might be linked to the biggest scrutiny from the beginning.
Yeah, I think, I mean, it's a study that has been quoted quite often. I do believe in the fact that mixed teams, not only female only, male only, but mixed teams, whatever the diversity is, perform better. It's not only in investing or in companies, it's also in corporates. The more diverse teams there are, the better performance. And it's proven as well, if you want to talk about figures, that the more female GPs there are in a fund, the better the returns as well. So it proves that diversity pays off.
Okay.
I fully agree because I think also on the investor side, having syndicates of angels with both genders in it is way much better way of looking to projects than a male syndicate alone of angels. There are other ways of looking to projects. There are other ways, which is very important in guidance to the entrepreneur. Female investors tend to ask different questions and give different guidance to the entrepreneurs once they invested much closer, and perhaps the way of how close you are to the company is perhaps also an indication of how successful your investment might be, and thus the return might be.
Okay, but I think in Belgium we don't have a very good track record on that. If you think of the percentage of female GPs or LPs or female business angels, I think the figures are not very nice now.
No, that's a long road to go, and it's a difficult road to go. But okay, we still want to do it. For instance, with our network, we have now a female president, Cynthia, who's guiding our Wise Women activities, which is aimed at bringing strong female persons together, not only as investor, but just as being in the field. And we try to get, of course, people to start investing from that network onwards. But that network has already grown to 200 members yet, and still growing. I think we have taken the route because, for instance, in France you have femme business angels. We have taken the route of bringing really the two genders together. We don't like this separate female angel group because when it's there, it always has the tendency of also attracting a certain deal flow, which is perhaps not a general all-over deal flow as it is in a normal sector-agnostic network. So we try to bring the two genders together in the perspective of having a better investment policy and follow-up policy after the investment. But it's difficult. The percentages in Western Europe are around 10, 12, sometimes 15% of the total number of angels in the networks which are female, which is way too low.
Yeah, it's a long way to go. Dirk, you're the president of the European PropTech Association, which you have, if I'm right, 3,200 startups into your association.
Yeah.
Do you have something on the gender issue and there is PropTech? Because PropTech, it's technology, it's really a male business world, no?
Yes, well, PropTech not. So I'm very glad to be able to say that while in the real estate and in construction industry, in a general way of speaking, there's only in the boardrooms, only 1 out of 10 board members is female, right? Which is very low, but that's also historical and not so easy to change that. In the technology for real estate and construction, the ballgame is completely different because we have already more than 40% are female founders. So it's really completely different. And I think it's also because, well, we are all over Europe active. So you see that in quite some countries, especially Eastern European countries, you see that a lot of the ladies have studied the technical part. So there's a lot of them are really used to be in everything that is STEM, we call it. Rudy, I don't know how you translate it into
Science,
English,
technology,
but yeah,
mathematics.
but in any way, it's the case that in our ecosystem we have a lot of female founders. This being said, when you talk like the original side, the investors, then you see like with the VCs, it's still more male than female. We are far from being at the balance.
Still a long way to go.
If I may add, Rudy, because this is the subject of my second book. If you look at the United States, there is the biggest transfer of wealth going to happen in the next few years, going from one generation to another. And more than 50% of the generation receiving the wealth, receiving the money, is female. Now, women tend to stay away from investing money. Now, if you have money, you should invest the money. But the topic of my book is in terms of this generational wealth, because I do believe that every entrepreneur is at the beginning of creating generational wealth, not only for themselves, their family, but also their employees, wider society, but also if they have a successful exit in a business, they can start investing in other entrepreneurs. So my book is about how to generate that personal wealth through your business, because if we have no successful exits from companies founded or co-founded by female founders, we won't have female investors. So it starts by either having a lucrative career in a corporate company or by having a successful business. Now, if you ask women, why did you found a business and why are you an entrepreneur? Do you have an exit in mind? Most women don't. They don't think about their exit. They start doing something out of passion because they like to do it, because they want to be their own boss. But down the road, thinking about, at one point in time, I could sell my business, or I could step out and become an investor in my own business and leave the operational stuff to someone else. Usually women don't think about their business that way. They don't see their business as an asset being able to generate cash, to generate value, and to, at some point in time, sell it. And also accepting, Reginald, I think, can testify this, accepting outside money in order to accelerate their growth. Also there is an issue. They don't want to accept money from someone else, not even a debt financier, because it puts pressure on you as a founder. You have to report, you have to perform, you have to present results. And a lot of women don't like that.
But can we now, rather perhaps as a philosophical approach, we all say we should be investor ready. But can we oblige people to open their capital? Should we not respect people saying, I want a small company, I don't want to grow fast? Perhaps they are more female than male anyway, but that's a choice in life. Should we really
Absolutely.
push them to do it?
No, absolutely. But also the fact that you even don't think about it. That's a problem. If you consciously choose to remain small, to work with your own money, and you can grow with your own money. There are big companies without any outside funding, but not even thinking about the fact that there are possibilities out there to finance your business other than your own money or the fool's friends and family around you. I think already there is an issue.
I think it's a question of a mindset, of course.
Yeah.
Yeah, and I think there is some kind of mismatch, at least at business angel level. When we see female entrepreneurs coming along, their plans, financial plans, business plans, tend to be less ambitious than male business plans are. On the other side, you have a largely male investor community. As we all know, male are looking much more for the ambitious ones and tend to first believe a high ambition in order. Perhaps this is the chance to make a good investment rather than in the less ambitious project of a woman. So that's the issue which is there. So even if we have female entrepreneurs coming along, mostly they tend to have less ambitious plans and thus gain less interest from angels for their plans.
But Reginald, perhaps less ambitious,
yes.
but more realistic.
Yeah, exactly.
Yes,
Rudy.
indeed. And that's why the overall return will turn out to be higher.
Yeah.
But it's not easy to convince men about that. So that's a little bit the issue. The male investors always tend to look for high growth companies, etc., etc. And I think if you're talking macroeconomically, I think we do need companies with ambition, because we can afford to have companies which are not so ambitious and tend to say, okay, I don't need extra external money, etc., and I can have a nice company and live my life as it should be. But that's not what we are looking for as angel investment, and I think that's also not what we are really looking for as an ambitious region, as Flanders is, in order to grow also internationally, because we are very near to every border, France, Germany, Holland. A lot of those entrepreneurs are ambitious and come into Belgium because it's a prosperous market. So we also need to have ambitious companies going outside Belgium.
No, you're right. You have too much lifestyle companies, as we call it.
Yeah.
But Dirk, you're not a lifestyle company, aren't you?
No, absolutely not. And I think what the 3,000 companies that I represent do is really practical. It's impactful companies, and I find it very important to look at the way that young founders nowadays, they are looking at, why am I an entrepreneur? And what I found on my contacts in the last, let's say the last 5 years with young founders, is that they have this ambition to contribute to, well, climate change initiatives, everything that can help, well, their future to mitigate, whether it be mitigating or going to net zero. That is at the basis of a lot of their ambitions. And it's of course not only in the sector that I represent, but it's also in health or in other ones. Mm-hmm. So I'm always impressed when I look at that intrinsic motivation that they have, looking certainly at how much money can we make with it, but in an equal way looking at what I'm doing. Is this having a positive, measurable impact on the planet? And I found it impressive because it's not what you would have expected or have seen 20 years ago, that specific motivation. And I think that, Reginald, I think that you see that because you are very close to these people also. The second thing I would like to say, Rudy, I think that's a very important one. When you look at both what Reginald is doing and what VCs are doing, due to the complexity of problems that we are facing, and also due to the complexity of the solutions that are coming up with more and more involvement of AI, you will see that both the business angels and the VCs will have to have within their ranks, they need to have like deep tech specialists, because how on earth are you going to understand if you want to invest in something? You first need to understand what the thing is doing and how good the thing is, right? And a lot of it, not everything, but a lot of it turns around technology. And if you are not equipped with your team to evaluate that technology, then you will not be able to make the right decisions in terms of investment. So I think that in the near future, both business angels and the VCs will need to hire people that can assist them in evaluating the technological viability and also, of course, the commercial viability of the solutions that they are considering investing in.
But I think there's a danger, Dirk, if you have all this competency and this complexity, that you might lead to big and bigger funds. And there will no place for smaller funds. And if you don't have small funds, you don't have seed capital. And then we come back to Reginald, his business, because we need business.
I understand, Rudy,
Yes,
but my thesis stays the same. Huh? But because if Reginald says, "Oh, we are considering an investment of 100,000 euros," it's a company and they are using AI in a very detailed way or advanced way. How is Reginald, even with all the experience that he has, how is he going to evaluate that? So I think the problem is the same, frankly speaking.
Yeah. Well, to give a start of an answer to that, first of all, AI is omnipresent. As per other technology terms, it's more like a buzzword now with our projects coming along. If I'm presenting, we have an inflow of about 600 companies per year. We present about 120 to our angels. Out of these 120, at least 80 will tell something that AI is involved in their plan. Okay. You as an angel, you're standing there alone, perhaps with 3 other angels, and you have indeed to assess, is this a really AI value in this project, or is it just name dropping and is it not relevant, etc. So that's a very, very difficult issue, even more because you're the first external investor mostly. So how did we try to solve this previously and also now? That's by working with our own co-investment funds. So we have established our third co-investment fund, meanwhile, angel-wise, which is managed by professionals which come from the sector. So then they are looking, as our angels are, they are looking into our deal flow and joining angels in their assessment, in their due diligence of projects. And they do this with a specific angle of being experts in the domain, which creates for the angels a more comfortable way to invest. But the problem there, or the challenge there is, this fund will only invest in 20 to 25 companies in 5 years' time. Our ambition with the network is to invest in like 100 to 150 companies in 5 years' time. So you have to find a way of angels to accept the knowledge of fund managers, but even by accepting that, not only looking towards, is the fund investing, yes or no, because we need more deals than only the one the fund's investing in. So that's the thin line on which we have to walk, and that's also our role as Angel Network, to find those angels who have experience. So we tend to go to younger angels, which have had a steep career or a steep growth in their own company, and luckily we have some of those experiences recently, henchmen, etc. People who know how to do this and try to get them in our angelship in order to bring them together with more seasoned angels, which have perhaps more money in the bank and more experience on other levels, to try to bring them together to invest in new companies. So it's a constant challenge for a network as well, not only to find the good deals, but it's even more a challenge of finding the good angels.
Yeah, I think so. Veronique, you want to add something on that one?
No, I do. I fully understand, and it's a challenge, and that's why, as I was referring to the debate earlier this week, that the VCs already team up with the companies, maybe in the future being interested in what is being developed and being able to tell with what we see at this point in time, we think this solution will fly or it won't. Or we will be interested because of reasons that we can see now, or we won't, helping the VC to assess the dossier and say, okay, either we step in and we take the risk, or we leave it.
Okay. Reginald, I think it's now more than 20 years that you're in the business angel business, if I'm right. How do
Yes,
you
25.
consider the evolution in that? Did you see some changes? If you compare it now with 20 years ago, what would you say this has really changed?
The attitude of the angels and the way entrepreneurs look to angels. On the attitude of angels, when we started, and you must know that we have a network which is, as it's called in literature, an entrepreneurial angel network with a lot of ex-entrepreneurs in it, which has the advantage of putting high tickets towards managerial angels tending to put lower tickets, but also asking more commitment. That's also why we're talking about wise money. We say angels are there for the long run, not for smart money. They are there for wise money. So what we tend to see is that those angels, like 20 years ago, they were all like sitting, looking at the fishbowl, and then there was the goldfish passing by. I want that one. So we tried to bring them to make more investments, sharing the investments with others. As syndication is in our core tasks of our association, it's one of the 5 core tasks described in our articles of association. Syndicate angels, because, and you know the curve better than anybody else, the life and death of an angel, Rudy. If you invest in 2 companies, the one which will go bankrupt will be the first one. The success, you have to wait 7, 8 to 10 years, but in 2 years' time, you will certainly have lost 1 or 2. And which could, if you don't have a spread portfolio, this will turn you down and say, okay, I'm not an angel investor anymore because this is not going the right way. So it's important to share this one. And we managed with the network to have Flemish angels, Belgian angels, more and more towards pooling money, bringing money in together. My colleague in the southern part of the country even works with created subsystems, small funds, pooling funds, in order to invest with those funds. So this has been a major shift. From the entrepreneur side, what we have seen, like 20 years ago, a lot of entrepreneurs were these lifestyle entrepreneurs coming towards us and saying, okay, I need an investment, and then, okay, let's see where we get over time. Now we see more and more entrepreneurs who already have an exit plan for themselves and for the angels, which of course is a very important part to talk about when investing. You need to look to the exits. We are not as bad as the VCs. They tend to enter the room backwards in order to keep the eye at the exit. We step in full frontal, but we like to know if there is an exit plan, how can it be declenched, and what can we do about this. So these things have worked to the way that people tend to find each other more and more and more. But of course, the challenge which is still there, and it has been there over 20 years, is the follow-on investment. VCs still look to angels as being some kind of emotional investors with some personal interests, etc., and tend not to look at them as being very, very professional, and certainly not in replacing their capital when moving in. So a lot of our angels still tend to get kidnapped in projects, hijacked. Yeah. Because they are not able to exit, which is of course as a refraining them from doing next investments. So the ecosystem still has a lot to learn, even after 25 years.
Dirk, how do you, as PropTech, how do you make the link with the business angel world? Because PropTech, of course, you're at the European level, but how is the link with business? Because I think you're much more tended to go to VCs, if I'm wrong.
So yeah, a bit more, and that has also a reason because quite often in those technologies for construction and in real estate in general, the investments for the startup to just to get it running are quite high, and like a ticket to be 200,000, it doesn't help you. Very often you need already 1 million to get it really rolling. Right, and if you then look at, for example, the big funding programs of the Commission, like the European Innovation Council, I work a lot with them. They even finance startups or ideas, or they invest 20 million, and they know that it will only be like on the market in 7 or 8 years. That's how far it goes. But this being said, there's something very interesting. I would really advise everyone to look it up. There was a very interesting article, Rudy, I send it to you, of John Cohen, who has published an investigation that they did into what is happening with venture capital, and he's predicting the extinction of venture capital. It is a bit like a slogan, but the idea is that VCs in their current structure are going out and what is coming up, and this is with data and numbers that he proves it in the United States. It's what they called venture studios. So startup studios, venture studios, and that is much more closer than what the structure of the way that Reginald is working, because there it's about you have already an incubator accelerator program that like we have at the European Property Association, and then you look for investors who will invest in the course of that program, and you will at the same time with your accelerator accompany that startup in his growth, right? And that's a different type of doing things, because very often a VC will hire an accelerator to have their invested company accelerate or grow, right? Whereas in a startup studio, you start from the beginning and you build it, you help them build yourself what they are doing. Very interesting article. The man is called John Cowan, Cowan.
Veronique, I think you have some comments on that.
Yes, indeed. Referring to, again, I'm looking at it from my perspective and the research I am doing in terms of if we compare ourselves, Belgium, to other countries, the money being raised or the size of the fundraising is usually smaller, preventing us from building or more easily building these bigger scale-ups. And once they either the companies are being sold too quickly. As you noticed, they at a certain point in time, they get an interest from a buyer and they sell and they cash. Look at what happened with Henchmen without judging whether they are have been sold too quickly. Or what I see, if they want to accelerate their growth, they try and find funding elsewhere. And this is not very helpful for the local companies, and certainly not very helpful for female founders. If I talk to female founders about, have you been looking elsewhere to get funding? If it's difficult to get funding here, they haven't. They haven't even thought about it. Maybe we can look to the Netherlands, or we can look across borders and stay in Europe. We don't even have to cross the ocean. So that pooling of money, like Dirk and Reginald are saying, is very important. Let's combine forces from different angles, whatever angle you take as an investor to a dossier. Together you're smarter, you can put more money on the table, and you de-risk your investment. But it's sometimes very difficult to get these people around the same table, because they all have their own agenda sometimes, preventing them to get together. But we should do that much, much more. Making ourselves bigger by combining forces.
Yeah.
And I think it's happening, but maybe too slowly, because we tend to lose talent to other regions, to the US, to the Far East, which would be a pity.
But it's a bit
As Dirk is saying, we have so much talent, entrepreneurial talent, so many ideas coming up, innovative ideas. So we should be a bit protective of keeping them here as long as possible, because they generate, they create, how do you say it, labor employees, that they hire people.
Yeah.
No, that's true, but I think the big problem, at least in Europe and in Belgium as well, is if they are looking for big amounts, let's say 15, 30 million, then there's nobody there, because the average fund is small, and I think that we need bigger funds. So at the other side, and then I come back to Reginald, we need the business angel, because I have seen a last study that out of the companies that are quoted IPO, 80% have been financed initially by business angel.
Yeah.
So if you don't have business angel, you don't have IPOs. It's a kind of parkour, as they call it in nice English.
But you need to build bridges, huh? So if how do they say, if Moses doesn't get to the mountain should get to Moses. What we have been doing with our Angel Wise fund, for instance, so that's a 20 million euro fund, which is a small fund, typical Flemish, even one of the smallest one. But okay, this is typical because we're talking Belgium. But as a matter of fact, when we're talking VC, Belgium is two completely split parts. You have the southern part with its ecosystem, which is much more publicly organized, and you have the northern part, which is more privately organized. But and also looking into deal flow of that part, even to make it a little bit worse there. But okay, with this 20 million euro fund brought by about 100 business angels and 2 institutional investors, we are able to bridge from 100,000 initial investment from that fund alongside angels to 3 million. That's a really important bridge. So we can go up, and of course we can't go up 20 companies times 3 because we only have 20 million, but the 4 or 5 biggest ones, we can invest up to 3 million, but we need to co-invest with others. So the pressure is on my team, on my fund managers to look for co-investors. If they raise the bar up to 1 million, there needs to already be some if they go further on. So we really try to impose ourselves with our deal flow towards the VCs. That's, as a matter of fact, what we have been trying to do. And I think that's the right way forward. We have other networks in Belgium who tend to make smaller funds. I don't know if that's the right way to do. I think an angel fund should do something else as what the angels privately on themselves should do. So that's why we tend to go for the up to 3 million investment alongside others. So if you would take that into account, you will find yourself in a way that you will be closing a round of perhaps at a certain point, 5 to 10 million, in which you will be doing this 1.5 to 2 or 3 million. And that's really bridging and bringing the companies up speed.
If you go further down the road, then we have, of course, the other problem. The biggest problem for me for business angels is the exit. There's been a study which has been done by HP Investment Fund. 81% of the business angels invested the last 15 years, 81% are still there. There's no exit. So, and there I think we discussed once, Reginald, to say if a VC gets in, should he not pay out the former investment being the business angel? But that's of course a very difficult issue to deal with. How do you see that?
It's the one who has the money who makes the rules, huh? So that's not easy to impose. Secondly, I want to make a nuance to that 81% because perhaps not all of those are forced to stay in. A lot of our angels also like if there is a dividend policy in that company. Meanwhile, etc., they say, okay, I'm fine. It's okay to be there. So I think the routes to exits for angels are not so many in Belgium. Since the companies have difficulties to grow internally in Belgium, the buyout by the initial entrepreneurs is way much less. I think the best route out for an angel is being bought, have the company being bought by an industrial player, preferably from the US or Canada, because then they buy a Belgian Brussels company, which is in the center of Europe. So that sounds nice, and perhaps gives the wrong idea that they have an access to the full European market. But I think what we have seen, those are the best exits in terms of returns in multiples.
On the condition that the company didn't stay in Belgium, of course.
Yes, of course, but okay. Economy is a living thing. We shouldn't be too restrictive in trying to keep everybody on our island. I'm looking a little bit more broader to that one. Because a lot of these companies are built on the know-how, which is with us.
Yep.
Still tend to stay with a certain center in Flanders or Belgium, and thus have a future.
Yeah.
Perhaps if this company would stay small on the Flemish or Belgian field, perhaps it wouldn't have a future. So bringing this company in a bigger company worldwide is giving a new future as well.
To stay positive, I think in your prop tech field, in Europe, we are far away from America. We're much better than in America and Europe.
Yeah, it's one of the few domains or in sectors where we are really we have a much richer ecosystem than the US and also than China. And that's all the reason why in our industry, really specific technology for construction and real estate, you have more and more also investors setting up US investors who are setting up European funds with a European headquarters like Luxembourg or Belgium also, because they know that the ecosystem is much larger in Belgium than in Europe than it is and in Belgium also than it is in the US, right? And in my case, in our industry, we have to thank the EU Green Deal for that, because our EU Green Deal is the toughest in the world. So everyone who is like doing tech for real estate and construction is like fueled by the European Green Deal. It's from that Green Deal and all the regulations that the demand comes from the corporates to be more sustainable, right? Because that's where we are going to. And when you then look at the fact that, I don't know if you know it, but it's a nice statistic, 60% of EU companies have zero alignment with the EU taxonomy. 60% of EU companies right now have zero alignment with the EU taxonomy. So that these are numbers. Okay.
So this means that Commission is doing things which are far away from reality.
No, I think that a lot of corporates in Europe are just waking up to the fact that, oh, there's something like the CSRD, there's something like SRS, the Sustainability Reporting Standards, and the CSDDD and the EPBD, just waking up to it while it was already years announced and in the making. So that's also, you know, a big opportunity for investors to look at those startups that have already that knowledge of that regulation and that are following up these regulations and turn them into something positive that they integrate into their solution. And that is exactly what I'm really expert in, because I'm talking all over in summits in real estate about specific these regulations and how the technology companies as a startups, as scale-ups, need to integrate, you know, the principles at least of that into the solutions that they will offer to the market. So getting back to what you were saying, Rudy, yes, we have in our domain a more rich ecosystem than we have in the US.
And perhaps last question to you, Dirk, what would be your recommendation at European level?
First of all, I think that you would need much more cooperation in terms of international scaling, because that's in our sector it's certainly not yet the case. Second, streamlining the legislation in all the different countries, because we all think that, oh, we have the European market and everything is okay. It's not the case. We have startups who have, you know, brand new solution, even tech solution, and it's a Belgian company that want to go on the Polish market, and oh, that's not possible in this way because there's another, you know, regulation in Poland around real estate or construction, for example, and it happens every day, and it happens to a lot of startups. So that's a bit of the advantage that the US has. That is, in most of these things, the important things are regulated by, you know, the federal law, whereas in Europe we have not that. So when we did the survey in the 3,200 startups, and it's only 2.5 years ago, we asked, what is your biggest pain point? Well, for 67%, legal challenges was number one, and the money was only number two. So I think that's a second point where we need to look at, and the third point is that I agree that we have a very good European structure for investing or funding, public funding or grants or subsidies for startups. And we have the European Innovation Council, we have like EIT, which is like 9 departments. They're also funding a lot of startups, but it's not like you can give subsidies to everyone. That's the first thing. Subsidies is not for every company the right thing. Third, if you get subsidies, then you don't have to find other money, so you could get lazy by doing it. It's not that I'm against public money, on the contrary, yeah? But I think that that's something that where on a European level we have been trying to help startups with quite some public money, combined with the money of Aernoudt. While in the US, they do it a completely different way, Rudy, and you know that very well. They say, you don't need to subsidize it. Come on, let's put us behind this, and we're gonna finance. And that's why it goes faster over there. It's like that.
But isn't there a big problem in Europe today that within the venture capital world, a lot of venture capital is public? If you take the seed capital, 42% is public money.
Absolutely. Look at the EIF also, which is good that the EIF is there, but yeah, sometimes they have like 50% of a fund, and that can be already that can be a lot. So of course, Rudy, and you know that better than I am, and Reginald, you probably too. You know that we have these mechanisms like the Basel III and so on that prohibit like pension funds and so to a certain level to invest in the more riskier part of new technologies, and that's also like a point that we need to work on in Europe and increase that because otherwise we're gonna be stuck in a gap. In that gap where at a bigger stage or later stage the gap is times 14, It means like when I ask 10 million in Belgium for a later stage, I get 10 million, and in the US I would get 140 million. It's crazy, and it's not it's lower of course on the level of regional, but even there it like regional, when he puts 100,000 and a business angel in the state, he would maybe put 700,000, right? So I think that's about that. So as long as we don't have that covered, and we have another mechanism for it, we're going to still be like in some cases the playground for the bigger guys in the States.
No, I agree
That's my
with you
opinion.
that I agree with you that pension funds, insurance companies should be the key of the success if you can mobilize them or endowment system. Veronique, do you want to add something on that one? Because
No,
you
I
bring a
think
company from 0 to 1 million in a couple of hours. That's what you do.
it takes a bit longer. I mean, if I find that formula, I wouldn't be sitting here. No, it takes a bit longer, but even though I kind of developed a methodology, which is a big word, oriented versus towards female founders, it's gender neutral way of scaling your business, because we all know, I mean, founding and growing your business has nothing to do with gender. It doesn't. I mean, whether you're a man or a woman or a non-binary person, it's not going to change anything. You need to do exactly the same things. The only thing I did is to look at it with a female perspective, out of my own experience and looking at it from a research point of view. The reason why I focused on that group is that so few women succeed in scaling to that first million. And what is important in scaling to a first million, it has to change your mindset. You fire yourself from your business, because you have to let go of certain things. You have to hire people, you have to outsource things, you have to delegate things. And women are not exactly good at doing that. They are perfectionists. They tend to do things, or they try to do things as long as they can themselves. What I do faster and I do better. And once you're into that mechanism that you say, I take a step back from my business, I take a step back or a step away from the operational things in my business, then things are changing. Then you can grow your business. And that first million is a first milestone, but you can keep on growing if you want. And I have to follow up the female founders. I started coaching from the first hour in 2019. So every year I have to see, did they grow in terms of revenues, profits, hiring people, getting funding? And I see that it works. Some of them scaled beyond 5 million euro revenues in the meantime, in 5 years' time. So it can go very fast once you get into that mechanism and that mindset. Okay, I need to change a couple of things in order to be able to scale and accept outside money often in order to accelerate my growth, then things are moving.
I agree with you on the fact on the mindset, which is the most important. But do you agree with Dirk as well, to make a shortcut, saying we throw too much subsidies to startups?
Yes, I do agree. Certain people are very much against any subsidies, because if you can't make it as an entrepreneur without public money, just by relying on the market and relying on investors, I mean, yeah, you should be so. You should have such a big belief in what you're doing that you don't even want to rely on public money, but just say, I want a product market fit or a service market fit as quickly as I can. I want to convince allies, investors to grow my business, and leave alone any public money. That can go to something else. That doesn't need to go to entrepreneurs. But
I have a little bit of a deviant position there, I think, and because also Dirk is not longer there to defend himself, but we also need to have a closer look to the US, because it's not so much the fact that that everything there is private money. When you go really into the details, the government is a lot involved as well. So I think in a startup period, we need to give people opportunities to elaborate their plans and start growing. Business plan competitions, giving some guidance, bring them to the right players in the market, perhaps with some kind of reduction on the price. I'm very much for that. But that, in a certain point, you should avoid that this becomes pampering. Just we are doing everything for the entrepreneur, and he just has to be entrepreneur, but doesn't have to work on his own plan. So that's the point. Where's the tipping scale there for not pampering but just helping people? So I think once it's getting for serious, the company money should always be connected to private money. And that's, I think, the big issue, which is mostly there. By having VC money from governments, etc., we can't, shouldn't, and might not expect from an official to become a fund manager, taking risk and etc. The risk aversion is very much higher with those kind of people than there are willing to invest in really the risk capital where it should go. So leave that decision to the professionals out of the private market to have their own KPIs to meet with their shareholders, etc. So connect the money. And also the European players still have a lot to learn on that one. There has been the European Angel Fund, which was co-investing with super angels. I don't think that super angels are the best angels to co-invest with. If you have 70 angel investments running, are you following up closely enough those companies? Once again, the wise money lies in bringing money and also bringing your knowledge in order to start fostering the growth of that company. So perhaps the money should go more towards those investors who really support the companies in growing. So I think there's once the level of company is going to some kind of stability and being viable, proven to be viable, then there should always be a connection of government money with private money.
And I think you're right, Reginald. We should not say that America does not subsidize. If you look to the SBIC program, we see the companies like Tesla, even or FedEx, they got through the program. It's a bit more in another way because what the government does, they give guarantee in order to raise money in the financial markets. But it's still a public intervention.
Yeah. And I also, think sorry, no, go ahead, Veronique.
The subsidies have objectives in a sense that on the one hand they want to stimulate entrepreneurship and to give people some confidence. Okay, go for it. You can try out your idea and see whether it flies. And the other objective of the subsidies is to steer the startups towards certain types of industry, certain innovations, to make sure that there is enough being developed in terms of we just talked about the Green Deal, that you attract entrepreneurs into certain developments. Absolutely. But I do agree, Reginald. I mean, the pampering, we should stay away from that because it's not helpful. It's not helpful.
And there is a big challenge for countries as our small country is in choosing the right sectors in which we want to grow. You're indeed right. We shouldn't spend the money all over the place. We should have certain focus points. But a very much important point in this one, that is, if you are a smaller market, you have the issue of perhaps not seeing everything. So that's also why I think it's very important. If you would ask me, one wish on the European level would be a single investor passport. If I, as a Belgian investor, would invest in France, in Germany, and vice versa, I would have the same rules, the same fiscal treatment, the same advantages, etc. Because now everything is very much scattered in Europe. All initiatives which were taking in the last 10 years trying to thrive the angels and the VC market are very nationalistic at trying to bring the money to the companies in this region or in this country, which is of course not the right way, because as a Belgian business angel, I don't want to invest in the best Belgian company in a certain sector. I want to invest in the best company, period. So this might not be in Belgium.
This brings me to another topic, not subsidies, but the other side, namely taxes. And now you are the president of the Business Angel Europe. And one of the things that you want is that if I'm a Belgian business angel and invest in France or in Spain, I would still have the tax deductions, which in fact, could you explain a bit that proposal you made?
Well, as a matter of fact, now most of the tax advantages, tax shelter schemes, etc., are linked to or the company in which you invest, which should be in a certain country, or to your status as being a taxpayer in a certain country, as being a private person or being a company. This should evolve. We have the French system in which is very open. If I, as a French citizen, would invest as an angel in a German company, I would get my tax advantage as well. This is a very good model in the way we like angels to be investing. For instance, at the level of Business Angels Europe, we organize every quarter, we have a Business Angels Europe e-pitch session in which we bring 5 to 6 companies out of the deal flow of our angel networks. This is a group of the 20 most performing angel networks in Europe and Canada. They can propose companies to pitch in this international e-pitch platform. But then in the next phase, you will see that there are considerations about these tax advantages, which create not a level playing field. So everybody has different ways and advantages. Even if I put 100,000 and another one put 100,000, he might have much better advantages than I have. This should become uniformized. So this is a challenge for Europe. If they want to promote themselves as a real economic one marketplace, then this should be treated as well.
But taxation is always a very difficult topic because member states say, no, this is ours, don't touch it. But indeed, I think you're fully right. That's something we should do. Veronique?
I don't have anything to add to the tax incentives, as I'm not aware about all the differences in Europe, but it's true. I mean, it's this dispersion in Europe, not only on the taxation level, but also in terms of market. If you want to, if you want to, I'm not going to say it's much easier, but if you want to scale your business in the US, you seem to have one market, which is not true. I mean, there are cultural differences. It's not black and white. But if you want to scale your product or your service in Europe, that's a different ballgame. I already look at Belgium, where you already have different languages, and I see these simple discussions with founders saying, "Oh, should we make our website in English, or do we need the 3 languages, French, Dutch, and English? And what do we do with German?" I mean, it's much more complex here to start a business, and then if you want to scale it again, you have a lot of things to deal with, which are different across Europe, and that's preventing our businesses to grow fast enough sometimes, or faster, or even want to scale. I had this business wanting to sell their products online in the Netherlands, in Germany, and already you think online, there are no frontiers. I mean, cross-border business is easy. Well, no, it's not. It's
Speaking
not.
about the fragmented market, Veronique, and then I'm turning to Reginald, is not a big problem that we don't have one stock exchange. We have so many, and we have too much fragmentation, too much supervision authorities, which makes that our companies in Belgium say, okay, if you want to get quoted, you go to NASDAQ.
Yeah, and procedures are too heavy. Well, of course, Euronext has been trying several things over last decades, and neither of them worked very well, because it's always about procedures. It's perhaps also because, well, as Belgians, we have a very specific approach on the stock. We are rather soon how should I say, our Brussels Stock Exchange, for instance, is not the best performing in Europe, and there's a reason for that. Not saying more than that. So perhaps also for a new starting and scaling up company, it isn't the best place to be, neither, because there's too much nervosity there with our Belgian people in order to be able to grow and to show at least certain quarters or negative figures. So that's an issue. But perhaps what I want to open up is, besides the role of a government being a tax holder, but also giving subventions, there's a third role on which the government should play more, is being the client of these companies.
Yeah.
A lot of government projects are not granted to their own companies or to small companies. And I guess there's there's an important role for the government as well, to be more accessible and to do more business with small companies.
No, I fully agree with you. You should see in the market 18%, 18% is public buying. So that's a huge market. But then if you look to the calls, even that Europe is doing, what we always say, if you want to go to appeal for the tender, then you must exist at least 3 years and show a good financial situation, which is mostly the opposite of being a startup.
Yes, and also,
Exactly.
I mean, one of the things you need as a startup in order to grow is to have good client referrals. So having the government as a client is already a good referral, a good reference, where you can say, okay, I sold to such and such government, but if you can't get in because of procedures, because of they asking you things you can't provide, yeah, that's very difficult.
How do you see now the evolution and financing and particular business for the next 2-3 years, to say?
Well, I must say, post-COVID, we were fearing that there would be a slowdown in angel investment. because, and for instance, in our case, we were very much physical meeting organized network. So we thought, okay, going online will be difficult, etc. I must have said we have experienced quite the contrary. The last years have been the most successful within our networks. Last year we had 36 deals realized. So this was one of our biggest completions in recent years, and that's exactly because of going online. And this made the way of getting to know companies for angels much more easy. So we are now, as everybody is, in a hybrid way of working. So we have physical and online meetings, joining angels from those different meetings. We have an online YouTube channel on which we post our companies, which is of course and close to our angels. So this all brings more angels on the table from point one. Okay, you will lose more, but you will certainly also have better matches between angels and companies going through the deal guiding process. So I'm very, very positive looking forward, because we see a lot of new angels coming along after COVID. Also that because of the way of working is more accessible. New angels come along, younger angels, as I've said before. I hope we can make a jump in female angels as well. Because what we do see is that angels which have come to our network after COVID tend to invest with smaller tickets. They are very much set to this pooling money thing and trying to get things done together, etc. So we also, for instance, we created our own crowdfunding platform within the network in order to start investing with tickets from €5,000 onwards, which is making the threshold lower for female investors, for young investors, etc. So I think it's about the blue sky we are looking at, having younger, more female angels. So I will not be looking at the old man anymore. No, just kidding. We have already a quite young network. Average age is it's towards 50 years. So we're doing a great job there, and I think that's the way for the future. And once the entrepreneurs, and we make a lot of efforts in communication on our deals, we realize once the entrepreneurs out there will be looking at who is investing, they will tend to more easily go towards the angel networks. And certainly, perhaps this could be an advice to all the networks out there. Gaining some scale is very important. Way back in 2003, we were the first in Europe to merge on networks. We had 4 networks in Flanders. Once again, this is 5 to 6 million inhabitants. We merged this into one, which gives us a much more cloud, we were much more in the picture. We did much better deals because more angels were at the table. As said, it creates a better connection between the finally chosen angels and finally chosen companies. So gaining scale is very important way forward in order to grow the concept of angel investing in your country or in your region.
I think as a business network, it's important to have scale. And I think I always thought myself, the quality of a business network depends on the quality of the angels.
Yes, it is. It is.
So that might be the message to all the business angel networks listening to us. Veronique.
Well, I think, and I hope it continues, we moved away and keep moving away from the perception that business angels are non-professional investors. It's no longer true. I mean, thanks to the networks like Ban Vlaanderen and any other network out there, I mean, there's this huge support system, not only for experienced investors, but also for, as you young investors stepping into the model. And on my side, this is what I try to make clear to female founders also. You need to look at different sources of financing. Also, as a rather small company in the early stages of growing, try to put your hand on what is out there, talk to people, and step away from thinking outside money means loss of control. No, I mean, and certainly business angels, they come in, they open up their network, they share their experience, they help you forward. I mean, I always say there's no investor having an interest in not seeing you succeed. They want to see you succeed, and they'll do everything they can. And I think that is certainly with women, they slowly start to realize, well, let's look into it. Let's look into it because it's true. I mean, we're allies. We're not sitting at opposite sides of the table. No, we're not.
So can I conclude as a recommendation to startups that even if they can get bank financing, perhaps it's better to have a partner which does not only give finance, but as we call it, wise money. And so
Yeah.
in fact, our advice to startups is please go along and pass by a business angel network. You have now 400 in Europe. We have, I think, two very efficient in Belgium, one in the north, one in the south. And I think that would be the message to startups and especially as well to female startups. Don't say it's good to give a mortgage on our house and we get the bank loan. That might be something to do later. But if
Yeah.
you start, it's good to have somebody next to you who does not give only money, but gives you advice. Try to
Yeah.
give them network, try to say you how to do it, and this increases the rate of success for starters.
Absolutely.
Absolutely. Also on your balance sheet, you need to provide, you need to, when you start to grow, once you take off, you need to have a good basis in capital there because then you can leverage. That's the leverage. The bigger the basis is, the higher the leverage can reach. So try to get your equity in a good shape before starting to grow, not while starting or
And then
while
you can
growing.
still go to a bank and to etc. etc. and we
Absolutely.
leverage on
Yeah.
them.
Yeah.
So I think that with both speakers, I will really thank you, and I hope I convinced that there's something to do in Belgium, and if you want to do startup, is the right place to be, even for the Americans, as you said,
Yeah.
Reginald. So Belgium is the right place for financing. We have very efficient business angel networks, business angels, and action for female angels. So I hope you all enjoyed our speech and our roundtable. And I wish you the best and the best for all the members of the World Business Angel Investment Forum. Thank you, Veronique. Thank you, Reginald. Thank you, Dirk.
Thank you.
Thank you,
See you
Rudy.
in Belgium.
Bye bye,
Bye.
Reginald. See you. Bye
Bye.
bye.